Good morning. This is part two. Hey, my name is Will. Thank you very much for joining me. I am a political economist. I'm not a CPA. I'm not an attorney in general. I'm just sharing my experiences with velocity banking as I understand it and try to share with my clients to reduce their credit card debt, student loan debt, home mortgages debt in general. So let's go ahead and get started here in part two as we did part one earlier. Okay, in part one, what I did was show that I received some rental income recently. That was just yesterday, $600 partial payment. And they're doing it bi-monthly. So the property repairs, I had 300, had a handyman go over and do some work. And I left $300 to go toward a bank account. Again, I've eliminated for the most part my checking account except for one or two to just move money in because I'm unable to deposit my entire debt, resources, incomes into the HELOC. I'm still looking for one. Okay, so what I'm doing, velocity banking is a method of using my cash flow or discretionary income to pay off debt through a line of credit, someone else's money. And I'm using the line of credit in terms of a credit card and also a home equity line of credit, in which I took out on one of my properties. And the HELOC is basically looking at how much your home is worth, say it's 200,000. And then they tell you, okay, we can give you a percentage of it. For primary residence, I think it's normally between you can do 80 to 95% because these are on my investment properties. They cap me out as about 65% of the value of a home. Traditionally, before doing velocity banking, I was picking up my paycheck, dumping it into a checking account, paying off my bills, and whatever was left in a credit card. Now I pick up my paycheck from my W-2 employer, also at various incomes from rental properties, dividends, and I put it into a HELOC that I have now. Then I pay all my debts using a credit card or a checking account. And then what I can pay with the credit card, then like I said, I use a checking account. But at the next month, I'm using one single credit card to pay all my bills, even if sometimes I pay the apartment rental, but that's normally a 30 to $40 charge. So as I mentioned earlier, I had $600 come in as a partial payment for the rental income. Of that 600, 300 went back out the door for a handyman. And now that 300 that's left, I put it onto the credit card. The credit card that I'm using had a previous balance of 410507, and that came after I put my 2 weeks paycheck in at 184513. So immediately when I was paid Friday for 2 weeks of W-2 work, I took that $1,845.13. I placed it onto the credit card that had a previous balance. Let's see, 1845.13 plus 410507. So that previous balance was $5,950.02. Once I put that 1845 on there, that brought it down to 4105. Now with this particular credit card, I have 0% for the next 12 to 13 months. It was initially not a 0% card, but they gave me a balance transfer offer. I took it and I moved some debt from the personal and business credit cards of others that I have over to here. But right now I'm paying 0% on this credit card that historically had a rate of about, I'm gonna say 22% to 24%. So thank you very much for coming back for part two. If you're looking to reduce your debt and use other services that I have in terms of being a qualified user on credit cards, helping you reduce your debt. I'm also doing small micro loans to help my clients get over the hump to do velocity banking. All right, thank you very much for stopping by. Have a great day, everyone. Bye bye.